Assalamualaikum, my name is Irdina Sofia binti Hamdan with matrix number S65510. We are from Group 10 and our company is Lambu Group Berhad. Now, I will share a brief introduction about our company, Lambu Group Berhad. Starting with what the company focuses on, Lambu Group operates mainly in the digital economy. It offers IT solution for businesses, manages an online shopping platform called Lambo Place, and provides delivery services through Lambo Move. They also expanded into lifestyle products including premium wine and food under the brand Lambo Sela. Next, where they operate, Lambo is actually based in Malaysia, but the company has also started to expand its business into China. Lastly, looking at the industry and market, Lambo is part of the digital and e-commerce industry, which is highly competitive and fast-changing. As a small company with limited market share, it faces challenges competing with bigger players, but it continues to grow through innovation and diversification.
Good day for everyone. My name is ACT3123. My matric number is S69932. Today I am talking about accounting standard and policy. For the first one is MFRS 116 property, plant and equipment. For the PPE, they record as cost minus depreciation and implement. For the depreciation, they use straight line depreciation over 3 until 50 years. The land is not depreciation. For the example, when the cost was 100,000 with useful life is 5 years, the depreciation is 20,000 per year. The implemented checked to avoid overstatement. The second one is MFRS 15 revenue regulation. Following 5-step model, IT solution on delivery or overtime, property percentage of complement noted, health carry when service is done. Example, 50,000 ringgit if contract, sleep revenue for delivery or installment, recognition when each part is completed. The third one is MFRS 138 intangible asset. They are recorded as cost minus amortization and implement. For the amortization of useful life is 3 until 10 years. The review early for implemented. For example, the software costing 30,000. For the useful life is 5 years. For the amortizations is 6,000 per year.
MFRS 141 Agriculture Biological Asset. The purpose govern accounting for biological asset and agriculture produce. Biological asset must be measured at fair value less cost to sell. Changes in fair value go to profit or loss. Lambo Group Berhad engaged in seafood wholesale, but not in aquaculture, livestock or crop production. Therefore, MFRS 141 does not apply to Lambo Group Berhad. MFRS 140 investment property. The purpose govern properties held to earn rental income or for capital appreciation. MFRS 140 measure at fair value model or cost model. Lambo Group Berhad use fair value model. Property classified as investment property. Fair value assessed at 5.75 million. Rental income of 263,000. Direct property expenses of only 11,000. MFRS 137 provision contingent liabilities and contingent assets. The purpose define how to recognize and disclose provision and contingencies. Recognition criteria for provision. Present obligation from past event. Probable outflow of resources. Reliable estimate of obligation. Contingent liabilities disclose only if possibility of outflow is not remote, not recognized in account. Financial implication indicates low exposure to legal or financial risk. Show financial health and stability.
Disclosure of non-current asset. So the definition is non-current asset like property, plant and equipment, PPE, investment property as an intangible asset, biological asset, impairment of non-financial asset, serve long-term business need with life beyond 1 year. They are reported on the statement of financial position. Property, plant and equipment, PPE. So they categorize in nature, include freehold land and building, plant and equipment, motor vehicle, furniture and fitting, office equipment, renovation and computer system. So the recognition, initial cost comprises purchase price and directly attributable costs like installation, legal, borrowing costs and qualified asset. Depreciation, straight line basis over useful life. Computer system 10 to 30%, building 2%, furniture and features, kitchen equipment, office equipment 10%, motor vehicle 20%. So the measurement, subsequent measurement is at cost less accumulated depreciation and any impairment. Freehold land and building are accounted using the revaluation model, valued by an independent valuer using the comparison method. Fair value hierarchy, land and building categorized as level 2, observable input. Impairment indicator based assessment each period as asset written down to recoverable amount where necessary. Investment property. Category and nature, freehold land and building held to earn rental income and capital appreciation leased to third parties. Valuation method, fair value via observable market prices level 2 or if unavailable income based or cost of purchase. Recognition and measurement, initially at cost including transaction costs, subsequently at fair value determined annually by independent valuer or management. Gain or losses, changes in fair value recognized directly in profit or loss. Disposal recognized upon sale or when withdrawn from use with gain or loss recorded in profit or loss. Intangible asset categories, patent, software, trademark, license, and capitalized development costs. Recognition criteria recognized only if future economic benefit are probable. Costs can be measured reliably. The recognition on disposal or when no further benefit, expected gain or loss recognized in profit or loss. Measurement, initially at cost, finite life, intangible amortized on a straight line basis. Review annually, indefinite life asset test for impairment annually. Development expenditure capitalized only if all the following are demonstrated. Reliably measurement of course, technical and commercial feasibility, probable future economic benefit, ability to use or sell, adequate resources to complete, otherwise expensive or as incurred. Biological asset, Lumber Group does not disclose any biological asset, implying none are held. If they ever hold such asset, they will be measured at fair value less cost to sell per MFRS 141, not currently applicable. Impairment of non-financial asset applies to PPE, intangible asset, and biological asset. Management regularly assesses for indicator of impairment. If indicated recoverable amount higher or fair value less cost to sell or value in use is estimate. Impairment losses recognized in profit or loss except for revalue asset. Reversal allow if previously recognized except for goodwill.
My name is Sharifah Nur Fatah binti Syed Nazri at 67654. I would like to explain about the economic, environmental and asset valuation. According to the Statement of Financial Position of Lambu Group Berhad as at 30 September 2024, the key of non-current assets including property, plant and equipment, PPE, investment, property, rights of its assets and other investment. The group property, plant and equipment, which is PPE, valued at 20.63 million represent a significant portion of its non-current asset. The company also owns investment property RM 5.75 million and right of use asset RM 4.50 million. Other investments have increased due to fair value gains by 106.83 million. So the total non-current asset increased to RM 137.71 million in 2024. Impact of economic on asset management and valuation. There are
3, which is inflation, interest rate changes, and market volatility. For inflation, the rising of inflation increases the replacement cost of asset and impacts the fair value of PPE and investment properties. Now, policy of regular asset regulation help to ensure that book values do not reverse significantly from fair market values. So the interest rate change, it affect the company cost of borrowing. So Lambo use its incremental borrowing rate at the discount rate for lease liability when the implicit lease rate is not determinable. So for the market volatility, it impacts the valuation of other investment. So Lambo Group Berhad recognized a fair value gain on investment of 10.05 million and indirect impact of market movement on asset valuation. Strategic adjustment and revaluation, there are two, which is property and investment revaluation and impairment monitoring. Lambo Group Berhad property and investment revaluation and regular revaluation of freehold buildings and investment properties to reflect fair market value, and the investment properties independently value and use as loan collateral. For the impairment monitoring, active monitoring for impairment indicated at each reporting date, which is the asset written down when recoverable amount falls below carrying value in line with the accounting standard.
From the financial year end 2020 to 2024, Lempo Group BHD experienced a volatile financial journey marked by sharp declines and a strong recovery. In 2020, the company recorded its highest revenue at 64.78 million ringgit with a solid profit before tax (PBT) of 10.98 million ringgit. However, the following years brought significant challenges. Revenue dropped to 24.77 million ringgit in 2021 and 16.58 million ringgit in 2022, while PBT plunged into heavy loss of 105.29 million ringgit and 75.28 million ringgit respectively, likely due to operational inefficiencies, the pandemic's impact, and asset impairments. In 2024, Lempo Group Berhad's revenue was largely driven by its IT consultancy and e-commerce segment, contributing 23 million ringgit out of 27.09 million ringgit total revenue, around 85%. This included digital platforms like Lambo Place and especially Lambo Seller, which saw strong performance through distributorships with premium wine brands such as Carbon Champagne and Verret Latour, tapping into a high-margin luxury market. Supporting this, the logistics segment brought in RM 2.55 million, reflecting a 15.91% growth aided by the last-mile delivery, vital for sustaining e-commerce operations. Lambo also diversified its income sources through new ventures, including a seafood wholesale outlet in Cheras. Next is financial ratio analysis. Gross profit margin. Lambo Group achieved a gross profit of RM 9.54 million from a total revenue of RM 27.09 million in 2024. A margin of 35.21% indicates that the company is managing its cost of goods sold efficiently. Next, net profit margin. With a net profit after tax of RM 2.896 million, the company retains roughly 11 cents of every RM1 in revenue after all costs, interest, taxes, and expenses. Next, current ratio. Lambo Group has RM 6.9 cent in current assets for every RM1 of current liabilities. This is a very strong liquid position, indicating the company can easily pay off its short-term debts and obligations. Finally, debt to equity ratio. Only 6 cents of debt exists for every RM1 of shareholder equity. It implies that the company is not heavily reliant on borrowing to finance its operations, and instead is funded primarily by shareholders' equity.